In a world where the economy seems to shift overnight and digital wealth can vanish with a market glitch, more investors are turning to something real, tangible, and future proof. The idea is simple: own what you can touch, what holds intrinsic value, and what has survived economic storms throughout history. When currencies weaken, when markets crash, or when technology changes faster than you can keep up, tangible assets stand firm because they exist in the real world. So, what exactly are tangible investments? They are assets with a physical presence: land, property, metals, art, or even collectibles. Things that you can hold, see, and protect. Unlike digital stocks or bonds that live behind a screen, these assets have enduring value that doesn't vanish with a click. Tangible investments are often used to hedge against inflation, diversify risk, and preserve wealth across generations. One of the most established tangible assets is real estate. Owning land or property gives you control, stability, and often passive income through rent or appreciation. While real estate requires significant upfront capital and ongoing maintenance, its long term rewards can be substantial. As global populations grow and urban areas expand, the demand for land will always exist. And that's why many consider real estate not just an investment but a legacy. Farmland is another powerful example. As the global population rises, so does the demand for food. Agricultural land is finite, yet essential, and that makes it one of the most resilient assets on the planet. Even though farming requires expertise or management, farmland tends to appreciate steadily over time while also producing consistent income through crops or leasing. It's a living, breathing asset that works for you year after year. Then there's gold and other precious metals, timeless symbols of value and stability. For centuries, gold has acted as humanity's financial anchor, outlasting empires, wars, and market crashes. While it doesn't pay dividends or rent, it protects wealth from inflation and currency devaluation. In times of uncertainty, people turn to gold because it's universal. No matter where you go, it's worth something. Silver, platinum, and palladium share similar qualities, often tied to both industrial demand and investment value. In recent years, we've seen gold prices soar past record highs, with experts predicting continued growth as global currencies weaken and government debts rise. This movement reminds investors that when paper promises fail, real metal still shines. Collectibles also make their mark as tangible assets. From classic cars and fine art to rare wines, vintage watches, and comic books, these items blend personal enjoyment with investment potential. A rare painting can appreciate in value as the artist gains recognition, while a well preserved classic car can double or triple in price over time. However, collectibles require passion, knowledge, and patience. Their markets are niche and sometimes unpredictable. But for those who understand their value, these assets can serve both emotional and financial satisfaction. Even antiques and historical artifacts have become strong investment vehicles. They tell stories, carry cultural significance, and can command premium prices when well maintained and authenticated. These assets connect the past to the present, preserving beauty and history while holding monetary value that doesn't depend on algorithms or market trends. While tangible assets offer stability, they also come with considerations. Real estate and farmland can be illiquid, meaning you can't sell them overnight. Precious metals need secure storage. Collectibles and antiques must be authenticated, insured, and carefully preserved. But despite these challenges, tangible assets have a proven record of resilience. They hold real world value even when economies shake, currencies fall, or digital systems collapse. Future proofing your portfolio doesn't mean avoiding technology or abandoning innovation. It means balancing the intangible with the physical. Infrastructure investments, renewable energy systems, and sustainable agriculture are all examples of forward looking tangible assets that combine material value with long term societal benefit. They are not just investments in wealth, but in the future itself. Investors are seeking assets that provide both safety and purpose. The most successful ones aren't those chasing the next digital trend. They are the ones building portfolios rooted in reality. When uncertainty rises, tangibility becomes power. So, what's the takeaway? The future may be digital, but real wealth still lives in the physical world. Land, metal, and matter endure long after markets have shifted. Investing in something tangible isn't just about making money, it's about anchoring your future in something that lasts.
This information is brought to you by Ramakrishna Surathu, author of the book You Are God, founder, developer, and chief executive officer of the self sustainable city